Everyone, and welcome to Managerial Accounting. Today we're going to be talking about activity-based costing systems. We're going to be reviewing Chapter 3, Problem 36 on page 30 of our accounting book. And before we begin, I just kind of wanted to give you a little background on what an activity-based costing system is like. Imagine you're going to dinner with your friend, and instead, you get the check, and you both look at it, and there's two ways of doing this. One, you can split the check even 50-50. Which is what some people, choose to do if, both of the meals are kind of the same way. However, if you're at dinner with your friend and he gets a lobster and you get a cheeseburger, it's not necessarily fair to split that 50-50. Obviously, a larger portion of that lobster dinner will be going to you, where your friend is going to pay for his cheeseburger. And that's kind of a good way to kind of explain how managerial accounting, the activity-based costing system, works. So right now, let's dive into Chapter 3, Problem 36. That being said, comparative income statements and managerial and management analysis. Deep Dreams Corporation manufactures two types of mattresses, Dreamer and Sleeper. Dreamer has a complex design and uses gel-filled compartments to provide support. Sleeper is simpler to manufacture and uses conventional padding. Last year, Deep Dreams had the following revenues and costs. All of this is given to us in the book. I've just simply put it inside Excel. As you can see, our revenue was $695,000. The Sleeper made $280,000 of that, and we had a total of $975,000. Again, we see the $695 for the Dreamer and $280 for the Sleeper. The direct materials associated with the Dreamer were $250,000. For the Sleeper, it was $110,000 for a total of $360,000. For the direct labor, we had $100,000 for the Dreamer, $50,000 for the Sleeper, for a total of $150,000 in direct labor costs. And as we move down, we see our indirect costs being $50,000 for administration, $75,000 for the production setup. Quality control is at $90,000, sales and marketing for $150,000, and an operating profit of $100,000. The company currently uses labor costs to allocate all overhead, but management is considering implementing an activity-based cost system. After interviewing with the sales and production staff, management decides to allocate administrative costs on the basis of the direct labor costs, but choose to use the following basis to allocate the remaining overhead. Here we see the production setup, meaning the number of runs, as a Dreamer is going to be equal to 10 and the Sleeper will be equal to 40. The quality control will be 30 and 60 respectively, and sales and marketing will be set to 25 and 50. Our first question is, complete the income statement using the active basis above. For this one, we're going to look at our revenue. We're actually just going to copy the exact same thing from up here down to here, and we're going to add in a rates column. And let's go through all these calculations, which are the gray boxes here. First off, we have the 33.3%. How do we get that, and what is it? For this one, we're going to be dividing the administration costs by the direct labor. That'll give us a total of 33%. From there, we're going to be taking that 33% and applying it to the Dreamer and Sleeper. So we'll take 33% of that 100,000, and that's equal to 33,000 there. Then we're going to take that 50,000. We're going to take 33% of that, and giving us $16,667, repeating respectively, giving us a grand total of 50,000 here. For the production setup, we're basically going to be doing the exact something very similar to it. We're going to be taking the 75,000 production setup cost total here, which was given to us, and we also have the Sleeper and Dreamer production setup here. We'll be adding those together and dividing in order to figure out what our ratio is. But this one's going to be $1,500. Then we're going to basically take the $10 in the Dreamer, multiply it times the 1,500 to get 15,000. We'll be doing the same thing again with the Sleeper, so 40 times our 1,500 will give us $60,000. As illustrated here. And all we're going to do is just drag and drop that all the way down. As you see, it basically converts everything from up here into the formulas below. And once again, that formula is simply just multiplying the activity level of the item and the particular production setup, the quality control, or sales and marketing. In order to figure out our total operating profit, we'll be taking our revenue, subtracting all of our costs. For the Dreamer, it'll be $216,000. For the sleeper, it'll be a negative 116,000, and the total will be 100,000 in terms of operating profit. Next up, we see the write a brief description of the report indicating how management could use activity-based costing to reduce costs. In this example, the way I kind of looked at it, as you can see here, when we divide the dreamer and the sleeper based on the activity, we see that the sleeper is actually losing money, where it's at 116. You're at a loss of $116,667, where the dreamer is making 216. So my kind of thought with that is that, just get rid of the sleeper. This is a great way to kind of itemize each one of those individual costs and figure out, hey, do we reduce production on this? Do we cut it all together? So that's something to think about. The next one says restate the income statement for Deep Dream Corporation using direct labor costs as the only overhead allocation base. For this one, very, very simple. Again, we're going to figure out a rate here. We're going to be taking the 150 of direct labor costs versus the 365 of the overhead costs. And many people get confused about where you get that 365. It's actually the total indirect costs located from the problem above. So it's going to be that 50, 75, 90, and 150,000 right there. And all we do is just kind of plug it right into the bottom of our formula here. For the operating costs, we'll be doing the exact same thing. We'll be taking our revenue and subtracting our direct materials, labor, and overhead costs in order to get $101,667 for the dreamer. For the sleeper, we'll see that the overhead costs change again, giving us only a negative $1,667, giving us a total of that $100,000 in operating profit. I hope this helps. I hope you've had a fun time learning all about the activity-based costing. Don't forget, just use the example of, if my friend is getting a lobster and I'm getting a cheeseburger, we're not going to split that meal down the middle. Thanks for watching.